a somewhat confusing equivalence that is being created between cryptocurrency and central bank digital currency, CBDCs. Often in popular journalism, you tend to use the two interchangeably, as if the CBDC is a cryptocurrency. And I break my head with my colleagues saying, listen, just because both are digital does not make them equal. They're two very different animals. CBDC is really fiat currency on a digital ledger. That's it. It's a fiat currency, but it's on a digital ledger. It's not crypto. Can you demystify that for us? And I'm going to start from Praveen and end with Tanvi on this one.
Yeah, and actually it's a very relevant and it's a great topic for discussion. And you're absolutely right, Raghav. I think digitization is getting conflated with the idea of a currency. So if the technologists and the engineers make their case for a for cryptos for a currency on the argument that it is digitized and it is faster and more efficient and all of that, then you will always have the contesting force, which is central bank will come and say, I'll do that. I'll digitize the existing one. I'll make it more efficient. I'll make it faster. And it's all good. It's great. At least you're pushing the central bank to be more agile and efficient. But the two are fundamentally different. One wants to be a currency. The other one wants to be a digital. So the two are not even equal at all.
That's what I'm saying. They're really so different, but I'm amazed how in popular literature you use them interchangeably. Siddharth.
Yeah, I think obviously, right? Like, so banks are used to handling cash, right? Before the whole digital UPI era came. And during the UPI era, we were in the V1, the version 1, where we, at least whenever there's a bank-to-bank transaction, there was one entity who's keeping track of all the transaction going between each other. Now, again, the technology has evolved. Now, taking advantage of, the open blockchain, what it gives you is to have a singular, ledger which can maintain balance across every bank. So from a centralized bank point of view, you can directly see the balances of different accounts on the blockchain, and that's the possibility. And you can also program it furthermore. So it's just an advantage, and I think it's just a medium of currency that is being evolved. Where before it was just a database changed, now it is being sort of there's a digital transfer that is happening in that. So I think that's the biggest difference.
So Punit, I'll just reword that question for you. If I want the efficiency of digital transactions, I now have the option of doing a central bank digital currency, which is backed by a sovereign, which I can exchange the rupees lying in my bank account or the dollars lying in my bank account. I can exchange for that CBDC. It has the same level of trust and guarantee that my non-digital rupee has. Why should I bother by taking the risk in a cryptocurrency?
I think the purpose would be met with the same, if the idea is just to transfer the funds between one to another, both can be done from CBDCs or from cryptocurrencies. If the idea is just to transfer funds between one place to another, that still can be done with both CBDC and cryptocurrency. But I think the use case would matter in whether, so CBDCs can offer you maybe stability, reliability, but cryptocurrency can offer you, independence and anonymity. So, or, transferring the funds without any, without revealing in your identity or making it a bit private. So I think that's it totally depends on the use case, how you want to transfer it and why you want to transfer it. That's where people can choose in whether CBDCs or cryptocurrencies, but CBDCs are naturally, they're just a digital version of a country's currency that is issued by a central bank. Whereas cryptocurrencies on its fundamental, use case are to run blockchains and are to run, different networks and providing.
I think the key word you used there was anonymity. I think that's important. That I'm not being tracked by a central bank digital wallet. I can therefore transfer outside of that system. That comes down to a cryptocurrency has features which are very similar to cash transactions. Tanvi, I give you the last word on this, that if I can do something in CBDC, then I have all the logistical and architectural and digital and speed advantages of of cryptocurrency. What I don't have is that I am not. I am still in a CBDC. I'm still within the statutory architecture, the government architecture, the government to government architecture. But when I'm using crypto, I'm on a completely independent architecture. Is that the key difference and advantage or disadvantage, whichever way you want to look at it?
I'm very glad that you've totally gotten on to the fact that these are entirely different trains, right? They're not going to the same station, right? So yes, CBDC is a digitization of fiat money, but if you see internationally, that has very big repercussions for the way money moves and works, right? So it will lead to a sort of new monetary order, new rules in the monetary system, all of which is very important for countries, right? Well, if you see crypto, it's as Siddharth and Punit have already said, right? It's about creating an independent system that can be trusted, that can be more efficient, that can be more innovative. And I think, I used to be a national security analyst, right? So I think it's well known that offense is the best defense, right? So if it's crypto that has really spurred the whole revolution, right? And it's crypto that has always been ahead of the curve in terms of innovation, in terms of what new ideas it brings to market, because it's really an open source system, right? And I think so central banks are moving fast, quite fast for government speed. They are talking about a unified payments ledger globally. They are talking about, these kind of overarching systems coming up. But I think at the end, it's the public that decides. It's like the market that decides. It's the adoption that we'll see in the future that'll decide these things. Because you've seen, like in the case of China, the government put so much backing into the digital yuan, but it's still not really able to replace or really beat the adoption levels of, WeChat money or Alipay, So, it's people and it's their choices, and all you can do, I think, even as governments, you can make rules, you can give people choices. I think I'll just end with a quote from Mr. Asbe, who, Dilip Asbe, who's the chairman of NPCI. And I was in a conversation with him a few days ago. And he said that, what we're going to do is give the customer as many choices of robust systems as we can, right? And even we know, like everyone knows in the government, that it is about what people will choose, right? And I think that's the note that I would end it on.
I think that's absolutely the right note as well. I mean, this is ultimately a choice that you, I, and billions of all of us will make, provided, of course, there is a regulatory framework, which is, leveling out the playing field, which is enforcing trust. All of those things, the cryptocurrency still has a long way to go there. But remember, this is a huge new technology. And like with all new technologies which have the ability to reshape existing orders, it's very early to say what the ultimate impact of this is going to be. But as long as there are going to be sensible people navigating the growth of this technology, you can be sure that the ultimate outcome will be positive.